With the U.S. election less than a week away, normally people would expect the Fed, who's announcing an interest rate decision on Wednesday, to remain on hold and try and stay clear of politics. But this has been anything but a normal election season and anything but a normal campaign. And with momentum turning and things becoming so close, it is possible that we could see some sort of November surprise from the Federal Reserve Board this Wednesday. Looking at the expectations for the current Fed meeting, this is from Bloomberg. We can see for November 2nd, the street's been pricing about a 15% probability of an interest rate hike and a 73% probability of a rate hike in December. The U.S. economy's been doing reasonably well. Most people are still thinking that, in the markets, are thinking that A, Hillary Clinton will win the election, and that B, the Fed would then raise interest rates in December. However, there is the potential for a surprise. In the last week or so, between the renewal of the FBI investigation of Hillary Clinton's emails and Americans all seeing huge increases in their Obamacare premiums, the momentum in the polls has changed. And I'll just show this here on a table from Real Clear Politics. We can see in the last week or so, Hillary Clinton's support has started to dwindle, and Donald Trump's support has started to take off. That changes the political mathematics. The markets aren't expecting a Clinton win, and what the Fed does this week might give you an idea of, and all of us an idea of which way things are heading, and are the Democrats hitting the panic button. Currently, there has been some antagonism between the Fed and the Republican campaign. In particular, it's not unusual for the last Republican presidential nominees to threaten to replace the chair of the Fed. Mitt Romney threatened to get rid of Bernanke back in 2012, and Donald Trump has already threatened to not renew Fed Chair Yellen when her term expires in a couple of years. He said she's a Democrat, he'd want her out, and he'd want to bring in a Republican, and that's perfectly normal and to be expected. However, the other thing that Trump has done is he's been on the offensive against the Fed, saying that he believes they're holding interest rates artificially low to prop up the economy and to help the Democrats. So some people have asked me, well, could the Fed come out with a rate cut? Well, a rate cut surprise at this point would be counterproductive to the Democrats. It would actually add fuel to Trump's fire, and he'd be out there talking like crazy about that. So if the Democrats needed help, and where I think they could see some potential for that is first of all with Yellen herself, because if Trump wins, her position at the Fed would be called into question. Would she stay on in that kind of a situation, or would she leave? That's certainly open to question. And the other one is there's permanent Governor Lael Brainerd, who has been a point of contact between the Fed and the Obama administration. She came from the Obama administration. She's been quite dovish. She's been identified as a donor to Hillary Clinton's campaign, and her name has been bandied about as a possible Treasury Secretary in a Clinton administration. So there is some connection between the Fed and the Democrats. So if the Fed were to surprise this week, the move that would actually help the Democrats would be for them to raise interest rates. If the Fed raises interest rates now, the Democrats could go out and be talking about how that's a vindication of Obama's economic policies, and that things are doing well, and that Donald Trump has no case, and that people should vote Democrat. That would be the line coming out of that. And the other part of which is, for the Fed itself, is that they've been quite complacent, and they've been acting pretty complacently throughout the year, that things would remain stable in the United States. They held off in June from raising interest rates because of Brexit. That was an external matter, not internal. If you wait for December, and Hillary Clinton wins, the people figure the markets will be fairly stable and the Fed could go ahead. However, if Donald Trump wins, people are expecting that we could see more volatility in the markets, and that could force the Fed to cancel or delay their plans to raise interest rates in December. So if you want to help the Democrats, or if you're worried that a Trump victory could spark market volatility, then the surprise move for the Fed would be to actually raise rates in November. So we'll see what happens this week. If the Fed raises rates in November, that could be seen as a sign that it's a close race, that they're worried that Trump could win, and so that's important. If, on the other hand, we see the Fed hold steady on interest rates, it means they're still fairly complacent, and they're likely expecting that Hillary Clinton would win, and that we wouldn't have too big a change in the U.S. political trends. So looking here at the dollar index, what's intriguing is that we're starting to see the dollar roll back over. It had run up in September and October as some of the other central banks stayed dovish, and the Fed kept sitting out on this edge of being more hawkish and being the next central bank to raise rates. We're now starting to see this roll over. But as we see the U.S. dollar roll over, this is suggesting to me that people are expecting that the Fed probably won't raise interest rates in November. That's what the currency market at least is telling us. If the Fed did deliver a surprise rate hike, we would probably see the dollar index go up a little bit, probably not too much, because at this point here, up at 98 and really above 97.50, the market's pricing in about 3 rate hikes over the next 12 months. So that could be one mid of 2017, and maybe they're even looking ahead to the end of 2017 for a third rate hike. So the market's already priced in a rate hike. We could see it go up a little bit. If we don't see a rate hike now, we could see the market drift back down a little bit. Where I think we would see a bigger swing if we got a rate hike would be here in the U.S. indices, because what we had was a huge run up through most of the year. We've had a head and shoulders top forming over the summer, and now a descending triangle, sign of distribution. People are expecting rate hikes to come. A sooner rate hike could spark a breakdown in the U.S. market here, but that remains to be seen. Still, this even though the general widespread expectation is that the Fed won't do anything on Wednesday, there is an increasing chance that they might do something, and that we could see a November surprise just ahead of the U.S. election.